Hi, welcome to Forex In Four. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started.
Good morning. Today is Wednesday, April 13th, 2011. This morning I'm talking about relief at the pump, and unfortunately I think the answer is going to be no. We've just seen recently, over the last 2 days, the biggest 2-day slide in oil from a nominal value that we've seen in some time. Basically oil came down from $113 a barrel to $105 a barrel, but it looks like it's rebounding a little bit today and hanging in there. So the question is that, we've seen this inflation going on that the Fed denies and tells us that there is no inflation. We see gas prices are higher, and typically what happens is that once oil starts making new highs, that obviously brings up gas prices, and then it takes a while for gas prices to react to that, to come back down. So there's that period of time where oil may be dropping, but gas prices may be remaining steady. So we may not see that relief at the pump just yet. But what I'm looking at here is a chart of dollar CAD. Okay, and you can see on the 30-minute chart that dollar has been strengthening over the last 2 days versus the loonie. Now we know about the high correlation to loonie to crude oil. All right, and you can see how on that 2-day drop in oil, dollar went up and spiked there. And this number right here also has to do with the Bank of Canada interest rate decision, which we saw yesterday. So we can see that there's a little bit of a spike there, about 96.5, and it looks like dollar's falling back down. And it looks like we're probably going to trade a range here somewhere in the bottom around 95, say 25, up to that 96.50, and it looks like we're going to see that with a bunch of different pairs out there. Just want to go to the euro real quick. Euro's back up. You can see that we're approaching what's basically looks like a bit of a triple top here at 145.25. Now in the eurozone, French CPI figures came in. They were a little bit higher than expected, which really isn't a surprise because we know about the inflation there. We know that they just raised rates to get in front of it, so it's a little bit of that's a figure for last month's inflation, so the effects of the interest rate hike haven't gone in yet. But we can also see that in the eurozone, industrial production was down, reported 0.4% versus an expected 0.8%, pushing the year-over-year number down to 7.3% versus 8%. So that's a little bit worse than expected. But as you can see, eurozone or euro is still higher there. Quick peek at the pound. Pound's also bouncing back. Okay, even though the employment report came in, and it was a little bit worse than expected. I mean, it wasn't horrible, but they were expecting that there would be 3,000 less jobless claims. There was actually an increase of about, it looks like less than 1,000 jobless claims there. So not really a big deal. The unemployment rate actually fell to 7.8% from an expected 8%, so that's a good thing. And then, of course, we know about the report that we got yesterday with the CPI data in the UK that was came in less than expected. So right now it looks like we've just got some dollar weakness. We've got some strength going on in the markets. Equities are higher after a small 2-day sell-off there. Well, actually it wasn't small, but it was a pretty decent 2-day sell-off. And then we had commodities lower as well. But the precious metals are still hanging in there. I mean, they pulled back from recent highs, but gold is still set up as a little bit higher than where it was. So later this morning, we're going to get advanced retail sales here in the U.S. We're expecting a gain of 0.5%. Last month's reading was 1%, so we are expecting a slowdown. We're going to see how big of a slowdown that appears to be, and that's going to be out a little bit later this morning, so that may be a shift here. We just had J.P. Morgan report earnings this morning. Looks like they beat on profits, but they were a little bit light on revenue, which, for all these earnings reports that keep beating, seemingly that seems to be the story, is that everybody's coming in. They're doing better with earnings and profits, but yet it's always on lighter revenue, which means that they're making it up on cost cutting by either laying people off or by reducing costs somehow or another. So that's what we got going on there. Just a quick peek at the Kiwi. Just want to show you the Kiwi. Kiwi looks like it's near recent highs up here at about 79 cents. All right, we could get a push higher up to 80 cents. Now we talked about the yesterday. the RBNZ Governor Bollard came out and said that inflation may be happening, and while he had to cut rates 50 basis points last time to counter the effects of the earthquake, they may need to bring them back up pretty quick to solve that problem. All right, and lastly, you can see, just look at dollar yen. Yen was strengthening yesterday on the risk aversion. You can see it looks like it's putting in a little bit of a triple bottom here. All right, and it looks like about 83.50, say, as support right there. So we could see a bounce higher to retrace some of this move lower and possibly get back up to the 85 level. So keep an eye on the commodities. Right now, oil it's bouncing a little bit higher, but it's still down from levels where it previously was. But that can change in a moment's notice. All it takes is something in Libya to flare up, or China to do something, and all of a sudden you've got oil prices catapulting, and then the market's reacting accordingly. So that's something important we're going to have to take a look at, and also how high price of oil affects inflation around the globe, as well as how it takes away from GDP, or how it takes away from sales figures. People have to spend more on gas and oil and things. That means that there's less money to spend on other things. So that's what I'm looking at today, folks. Good trading to all.
As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.